Hi everyone. Today we are going to see cost accounting. So, what is cost? The term cost has a variety of meanings according to the context. In common parlance, cost refers to the price of the product. But in management terminology, cost refers to expenditure. The amount of expenditure incurred on given thing. For example, the cost making a chair includes the amount of spend on materials like timber, nails, polish, and wages paid to carpenter and other overhead expenses. Costing means the technique and process of ascertaining cost. The technique and process of costing depend upon the nature of industry, type of product, and method of production. Cost accounting is a process of classifying, recording, allocating, and reporting the various costs incurred in the operation of an enterprise. So the words costing and cost accounting are used interchangeably, but they do not mean the same thing. Costing denotes the technique and process of ascertaining cost. So it provides the detailed cost information that management needs to control current operation and plan for the future. It can be carried out automatically, but cost accounting is a formal system established for recording cost in books of accounts. Definition: a type of accounting process that aims to capture a company's cost production by assessing the input cost of each step of production as well as fixed costs such as depreciation of capital equipment. So, next, objectives of cost accounting. The major objective of cost accounting or cost ascertainment, furnishing of cost data for decision making and control of cost. The objectives are listed below. To find out the total cost and cost per unit of various products manufactured, to disclose the proportion of different elements such as material, labor, and overheads in the total cost, to provide necessary data for fixing the selling price, and to ascertain the profitability of each product and advise the management as how these profits can be maximized. Then to supply estimates of cost on the basis of historical for the preparation of tenders, quotations, etc. And most important objective of cost accounting is a data to the management for decision making, planning, and controlling also. To adopt a suitable system of inventory control to avoid excessive locking up of working capital in stock, and to identify the sources of wastage and losses in the business, to formulate the incentive bonus plans and implement them to improve labor productivity and reduce the cost, and to exercise the effective control on the idle times of men and machines, to help in the preparation of budget and implementation of budgetary control, and to compare the actual cost with the standard cost and analyze the causes of variance, and to supply the useful data to management to take vital decisions such as introduction of new products, replacement of labor, my machines, etc. And to advise the management on future expansion policies and proposed capital budget also. Next, difference between financial and cost accounting. So first thing, financial accounting, the main objective of financial accounting is to prepare profit and loss account and balance sheet to report to the owners and the outsiders. But cost accounting is to provide cost information to the management for decision making. Second thing, legal compulsion. Financial accounting is compulsory, but cost accounting is compulsory only for certain industries. In other cases, it is optional. And recording of costs are recorded in aggregate in financial accounting. Then cost accounting are recorded on unit basis only. Data used. Financial accounting only monetary data are used, but cost accounting both monetary and non-monetary data used. Periodicity of reporting. Financial accounting reports operating result and financial position at the end of the year. It gives information to the management as and when required in cost accounting. Scope. The financial accounting deals with actual fact and figures, but cost accounting deals with fact as well as the estimate. Next thing, stock valuation. In financial accounting, stocks are valued at cost price or market price, whichever is less. But cost accounting, stocks are valued at cost only. The analysis of cost price. Financial accounting shows the overall profit and loss of the organization, but cost accounting detailed cost and profits of each product, job or process. And classification of cost for expenses. The financial accounting, no distinction is made between fixed and variable cost, but cost accounting distinction is made between fixed and variable cost also. And control. The financial control imposes is on reporting and not on control, but cost accounting imposes only on control of material, labor and overhead, etc. Next, what are the elements of cost? So in our elements, the total cost, under this total cost, material, labor, other expenses are there, and direct material, indirect material, indirect labor, direct labor, indirect expenses and direct expenses. Overheads. Under this overheads, factory overhead, administrative overhead and selling and distribution overhead are there. The total cost of a product is composed of three elements: material, labor and expenses. So the direct cost, those costs which can be identified with and allocated directly to a particular product, process or job. These costs are also known as prime cost. The indirect costs are those costs which cannot be allocated but can be apportioned to or absorbed by a particular product, process or job. These costs are known as overheads. So the prime cost, by grouping of above elements of cost, the following divisions cost are obtained. Prime cost equal to direct material plus direct labor plus direct expenses. So none the elements of cost are explained below. Materials. The substances from which the products are made is known as materials. They can be direct materials or indirect materials. The direct materials are those material which form a part of the finished product. These material cost can be conveniently identified with the and allocated to particular product, process or job. It is a part of prime cost. Example, timber in the furniture making, cloth in dress making and shoe making, bricks in building a house, etc. And indirect material, those materials which do not form part of a finished product. Cost of indirect material cannot be identified with and allocated but can be apportioned to a particular product, process or job. For example, cotton waste, lubricant, grease, small tools, etc. Next, labor. For conversion of raw material into finished product, human effort is needed. Such human effort is called labor. Labor can be direct as well as indirect. And direct labor is that labor which is directly engaged in the production of goods or services. The wages of such labor are known as direct wages. These labor cost or direct wages can be identified with and allocated to a particular product, process or job. It is a part of prime cost. For example, wages of spinners, weavers in textile industries. Indirect labor is that labor which is not directly engaged in production of goods or services. It indirectly helps the direct labor engaged in production. The wages paid for indirect labor is known as indirect wages. It cannot be identified with and allocated but can be apportioned to a particular product, process, or job. For example, wages of mechanics, supervisors, watchmen, sweepers, timekeepers, etc. Then overheads, factory overheads. These are also called manufacturing overheads or works overheads or works on cost. Factory overheads cover all indirect expenses incurred from the stage of raw materials to finished goods. It includes indirect material, indirect wages, and indirect expenses. For example, factory rent, supervisor's salary, power and fuel, heating and lighting, depreciation on factory building, etc. Second, administrative overhead. These are expenses incurred for running the administrative office. For example, office rent and salaries, printing and stationery, legal expenses, telephone expenses, etc. Next, selling overhead. These are expenses incurred for actual sale and promotion of sales. For example, salaries of sales manager, commission, traveling expenses of salesman, and promotional expenses like advertising and publicity after sales service, etc. Next thing, distribution overhead. These are expenses concerned with the packing and the delivery of goods to the customers. Example, packing charges, warehouse expenses, depreciation of delivery, van, loading charges, etc. And next thing, classification of cost. Cost classification is the process of grouping of cost according to their common characteristics. It is essential in order to identify the cost with the cost units or cost centers. The following are the main classification of the costers. And first thing, classification according to nature element. According to this classification, cost are divided into three categories like material, labor, and overhead. The classification helps in finding out the total cost of the product. This also helps in the valuation of work in progress and finished goods. Second one, classification according to function. The under this cost are classified according to the purpose for which they are incurred. Thus, cost are classified into production cost, administrative cost, selling and distribution cost. Now, third thing, classification according to variability. Under this, cost are classified according to their behavior in relation to the volume of output. According to this, cost may be grouped as fixed cost, variable cost, semi-variable cost. So fixed cost remains fixed irrespective of the level of output. Example, rent, salaries, insurance. And variable cost varies with the volume of output. For example, direct material, direct labor, direct expenses, selling commissions, etc. And semi-variable means a cost which partly fixed and partly variable. For example, repairs and maintenance, depreciation on plant and machinery, etc. Next, classification according to normality. Under this, costs are divided into normal cost and abnormal cost. Normal cost is the cost which is incurred at a given level of output under normal conditions. It is a part of the cost of production. And abnormal cost is the which is incurred at a given level of output under abnormal condition. For example, cost of abnormal idle time, abnormal wastage, etc. Such costs are charged to costing profit and loss account. And next one, classification according to controllability. Under this, costs are divided into two categories. They are controllable cost and uncontrollable cost. Controllable cost which can be minimized by the executive action are known as controllable cost. For example, variable cost. And uncontrollable cost which cannot be minimized by the executive action are known as uncontrollable cost. For example, fixed cost. Next, classification by time. On the basis of time, cost can be classified into two categories. They are historical cost and predetermined cost. And historical cost which are ascertained after they have been incurred are known as historical cost. Such costs are available only after the completion of production. And predetermined costs, which are determined even before they are actually incurred, are called predetermined cost. Its costs are also known as estimated cost. And next, a classification according to time. And classification according to managerial decisions. On the basis of cost may be classified into following types: marginal cost, differential cost, imputed, replacement, and opportunity cost. The marginal cost is also called variable cost. Variable cost varies with the volume of output. Variable cost include prime cost and overhead. In marginal costing, only variable costs are taken into account for determining the cost of product. And differential cost arises the result of change in the level of output. If the change increases the cost, it will be called incremental cost. If the change decreases the cost, it will be called decremental cost. Next, imputed cost. These are imaginary costs which do not involve payment in cash. For example, rent on own building, interest on capital, depreciation, etc. A replacement cost is the cost of replacement of an asset at the current market price. For example, a machine was originally purchased for rupees 10,000. If the same machine has to be purchased now, it will cost rupees 25,000. The replacement cost is rupees 25,000. And opportunity cost, it is the value of benefit is sacrificed in favor of an alternative course of action. For example, the fixed deposit is withdrawn and invested in project. The interest on fixed deposit, which is sacrificed the opportunity cost, this cost should be taken into account while evaluating the profitability of the project. Next, sunk cost. A sunk cost is irrecoverable cost and is caused by the complete abandonment of a particular plant, such as cost irrelevant in decision making, it is already incurred. A shutdown cost, these are costs which continue to occur ever if there is a temporary stoppage of production activities, for example, rent, salaries, insurance, depreciation, etc. And conversion cost, it refers to cost of converting raw material into partly or fully finished product. In other words, conversion cost is works cost minus the cost of direct material. Avoidable cost are those costs which can be avoided by discontinuation of a product or department. Unavoidable costs are those costs which cannot be avoided by discontinuation of a product or department. Next, classification according to capital and revenue. Capital cost are those costs which are incurred purchasing some asset for purpose of increasing earning capacity of a business. A revenue cost are those costs which are incurred to maintain the earning capacity of a business. For example, cost of maintaining assets. Next, classification by association with products. Under this classification, cost can be product costs and period cost. Product cost are those costs which are associated with the and directly identifiable with the product. These are included in the inventory values. Example, raw materials, direct labors. Period cost or those costs which are not directly associated with the product, but period costs are incurred on the basis of time, such as rent, salaries, etc. These are treated as expenses of period in which they are incurred. Next, methods of costing. Job costing, it is also called specific order. Under this method of costing, the first one, job costing, it is also called specific order costing. It is adopted by industries where there is no standard of product and each job or work order is different from others. The job is done strictly according to the specifications given by the customers. Usually the job takes only short time of completion. And second thing, contract costing, it is also known as terminal costing. Basically, this method is similarly to job costing. However, it is used where the job is big and spread over a long period of time. The work is done according to the specification of the customer. The purpose of contract costing is to ascertain the cost incurred on each contract separately. Next, batch costing. It is an extension of job costing. A batch is a group of identical product. All the units in particular batch are uniform in nature and size. Hence, each batch is treated as a cost unit and cost separately. Next, process costing. It is also called continuous costing. In certain industries, the raw material process through different processes before it takes the shape of a final product. In other words, the finished product of one process becomes the raw material for the subsequent process. It is used in such industries. Next, unit costing. This method is also known as a single or output costing. It is suitable to industries where production is continuous and units are identical. The objective of this method is to ascertain the total cost as well as the cost per unit. A cost sheet is prepared taking into account the cost of material, labor, and overhead. Unit costing is applicable in case of mines, oil drilling units, cement works, brick works, and unit manufacturing, radios, cycles, and washing machines, etc. Operating costing followed by industries which render services. To ascertain the cost of such services, composite units like passenger kilometers and ton kilometers are used. For example, in the case of bus company, operating costing indicates the cost of carrying the passenger per kilometer. Operating costing is adopted by airways, railways, road transport companies, goods as well as passengers, hotels, cinema halls, powerhouses, etc. Next, operating costing, detailed application of a process costing. It involves costing by every operation. This method is used whether there is mass production or repetitive nature involving a number of operations. The main purpose of this method is to ascertain the cost of each operations. Next, multiple costing. It is also known as composite costing. It refers to a combination of two or more of a above method of costing. It is adopted in industries where several parts of produced separately and assembled into single product. For example, cycles, radios, television sets, etc. In addition to different method of costing, the following techniques are purpose of ascertaining cost: historical costing, direct costing, absorption costing, uniform costing, marginal costing, standard costing. The actual cost are ascertained after they have been incurred. This is a conventional method of cost ascertainment. And direct costing is the ascertainment of direct costs in respect of department, product, or process. This is aggregate of marginal cost, a portion of fixed cost that are identifiable with the product or process. Direct cost are therefore traceable cost. These are methods of costing. Thank you.